So if somebody says, I didn't get a 1099, so I didn't report it, how
No.
does the IRS respond to that?
Well, you don't need a 1099 to for an income to be taxable. I mean, it's all under Section 61 of the code. All the income is taxable unless you can show that it's not.
It
So
doesn't say
it's
worldwide income, and I think that's where we
yeah,
defined gross income. What is that, line
yeah,
8 on the
gross
1040?
income.
Yeah,
Yeah,
yeah, yeah, yeah.
basically.
Lines, yeah,
Yeah.
code section 61.
Yeah,
Sure.
so funny you mentioned 1099s because starting this year, this coming filing season, there will be a Form 1099-DA. And
Okay.
that Form 1099-DA will have to be filed by U.S. exchanges and will specifically address cryptocurrency transactions. So starting this year, yeah, they will have to report proceeds, but starting next year, starting in 2027 for 2026 tax year, they will have to be reporting basis. But based on what I can see, that information is never going to be accurate.
Something similar happened in the Securities and Exchange
Yeah.
when the broker dealers were required to report, like the big names that people see on TV, were required to report basis for taxpayers for their stock transactions.
Right.
Now they're pushing crypto into that same sphere, is what you're saying, that it's going to be
They
regulated
are.
just like the SEC regulates
Yeah,
the
it will be regulated. Well, as a matter of fact, I recall seeing back in tax year 2016 or 2017, I recall seeing 1099s of various types filed by exchanges. Coinbase filed 1099K. There were also 1099B filed. Then they stopped. Some exchanges filed, some exchanges didn't. But IRS used that as proverbial foot in the door because at
Okay.
that point they knew that the taxpayer was involved in crypto. So
Uh-huh.
even if, like, let's say 2023 was under audit, they would go back to 2017 and say, well, I see you were involved in crypto in 2017. Did you close that account? What happened to it? Why
So
didn't you report it? What
what
were
you're talking about is when crypto activity from years ago, this is when it's suddenly getting into trouble now. And that's why. But why now? I mean, are they seeing things now and then going back, or how does that work?
Oh, absolutely. Yeah. I mean, they still have data from the original John Doe summons in 2016, 2017. There were about, I don't know, 15 John Doe summons actions filed,
Okay.
against various exchanges. It started with Coinbase, then there was Poloniex, there was Gemini, Kraken, all the bigger ones. And by the time the John Doe summons action concludes, those years are typically out of statute. So they
Oh,
use those old records to kind of go into the future. They use those records to look at present activity, and it's the revenue agent's job to basically develop the case based on the old records. They have
okay.
access to 2016, 2017 records. They analyze those records, look for any additional leads, and then they go back to those exchanges and issue a summons for current records.
Okay.
That's
Okay.
how they
So
get that.
when you have crypto, is reporting some of it, some of the crypto income better than reporting none? Or does partial reporting sometimes make things worse?
Yeah, well, it's always better to report some of it. I mean, I guess from a taxpayer point of view, they may not always have access to records from certain exchanges. It's because I've seen it. Some exchanges are here one day, but not next day. We've seen what happened with FTX.
Yep.
Uh,
Yep.
it was here, then went under, and when I was with the IRS, handled some of those cases, and people were not able to get records, and they were kind of in a pickle because everybody knew and they knew they were supposed to report it. No way to access those records. So they were in a pretty unfortunate position.